Hey guys, welcome back to Money Talks. So today, by now you've heard about the zero interest rates. Feds dropped to zero interest rates. Today, I'm going to talk a little bit about how that can be effective for you and what are things you can do to help move yourself forward financially. But first, if this is your first time joining us, please click that subscribe button and ring the bell so you'll be notified every time I upload a video. Also, go ahead and leave me a comment or question that you wanted or need an answer to and just trying to figure things out. Also, if you like this content or any other video on the channel, please go ahead and hit that thumbs up button. So, for a while now, we've been hearing talk about zero interest rates and the Fed's got to drop to zero interest rate. Well, they've done that. But what exactly does that mean? Now, when the Fed makes these rate cuts and drops the range, the initial impact is it allows banks to borrow money a lot easier and a lot cheaper. But how does that translate for you, the consumer? Well, each time, as you've noticed, when the Feds have dropped rates, it typically results in mortgage rates falling. But not just mortgage rate, it drops what is known as the prime rate. So things that are tied to that is home equity lines of credit, credit cards, personal loans, and it can take some time, but even vehicles can be impacted. And if you're a saver, you've noticed that the interest you get paid on your savings account drops as well. But in this volatile time, and I like to call it rate sensitive time, what does that really truly mean? Well, it means if you've been taking care of your credit, you can actually make this time and take advantage of the opportunity. So, one of the biggest opportunities you're going to have is if you're a homeowner or if you're purchasing a home. If you're purchasing a home, this puts you in a great driver's seat so that you can really control the conversation as far as how much you're going to actually pay for your most expensive tool. Rates have already been low, but again, you want to get as low as possible. And over the next few days, in the coming couple of weeks, you'll see those rates drop even more. So it's very important that you realize, hey, do I want to actually commit to the purchase of this home or do I have some time to spare? And this puts you more in the driver's seat than a financial institution because ultimately you can pull out that deal whenever you feel like it. You don't have to buy a car, you don't have to buy your home. Now, sometimes you might be pressed, but if you don't get it right on the front end, it makes it very, very difficult on once you are already in the home because then you won't be able to refinance. So you want to get the best prime rate you can get right on this front end. Second, if you're already in a home, now you're starting to look at, okay, what is my current interest rate and what are interest rates running? Now, typically, interest rates don't normally change frequently throughout the day. They can, but because of this rate sensitive time, they have been changing a lot more frequently throughout the day. So you can make sure that you need to be watching throughout the day, or as I've suggested people in my group, really connect with your mortgage lender or financial institution or whoever you're speaking to about your current mortgage to have them reach out to you when their rate drops to a certain number. That way you can ensure you have some guardrails so that even if you're not getting a notification soon enough, you have somebody who kind of working on your behalf. Also, that's a good way for you to make sure that they're earning your business because ultimately, while it will be a good time to refinance, the fact is everyone won't be qualified. So those opportunities to refinance those deals, you'll want that person will want to make sure they get that loan because that's how they make their money. Another good thing you can take a look at while you're looking at this rate sensitive time means if you're going to refinance your home, you may be also able to look at other debt that you can consolidate during this time. So really paying back. You want to really prepare before you go into, oh, I'm going to refinance the house. Do you have a car loan that's just a little bit on or a personal loan that it's only a little bit left? And do you have some equity in your home? Well, first you want to first think, hey, am I going to be in this home? How much longer am I going to be in this home? Is it 5 years? Is it 6 years? Things of that nature. If you know you're going to move over the next couple of years, then consolidating that debt could be a big win for you right now because it will free up the cash flow in your present time so that you're able to sock away more cash and take that debt away from you and potentially kind of keep a good managed process on your credit score. Again, you have to really know these things going into the conversation. So, how can you know the value and how can you know the equity? Well, the equity in the home means you take the value of what your home is and you subtract how much you owe. And the equity is that number. So you can go on sites like Zillow, Trulia, even Reddit, and kind of get a rough estimate. But the value of your home may not match what the lender is going to give you. So if you want a really good value, you can actually call your lender and say, hey, what is the value you're actually pulling from my home? And a lot of them will actually give you that value. Some do it through electronic process. Some have to have a appraiser come out. If they are going by the traditional appraiser route, then that may not be feasible. But if they're doing it from an online method, that only takes them a little few seconds, a few minutes to actually get that value. And that can be something to give you good information so that you're able to see, hey, am I able to potentially consolidate debt and refinance the home and drop the interest rate and drop the years on this mortgage? All those things is what this zero interest rate range can provide, because that's all it did. The zero interest rate means it dropped the rate range floor to 0 to 0.25. The mortgage lenders and lenders around can still charge interest, but when it gets to the demand and demand gets low and they're really trying to spearhead and get more buyers in the market to borrow cash, that's where you'll really see the rate drop to, again, historic lows. It's already been historic, but it can go further. And putting that rate cut floor down to the zero range means that it can go as low as ever. As it can't go no lower. I mean, you can go negative, but that's likely unlikely to happen. More importantly, you want to look at what can this scenario do for you and how can you free up cash while still managing your credit. You don't want this time to put you in a financial burden or a hardship so that when it comes out, you're worse than you were before. You want to be able to make things simpler. The other thing you want to think about is there are all different credit options to help you. Maybe you don't have a home, but a lot of the government movement and recent approvals have been to try to stimulate borrowing and encourage borrowing. But along with that means, hey, your personal loan rates are lower. So if you have credit card debt, maybe this is the opportunity for you to speak with your credit union or bank and get that 7.5%. And you might even see rates lower because, quite honestly, average credit card rates are about 15 to 17%. So if you're able to drop that rate significantly, not only can you get on a path to speeds up your debt repayment, but it also helps improve your current cash flow. And again, all these things, when you're thinking about debt, really you're feeling the stress and you're feeling the risk and you're feeling the pressure because it dampens your cash flow. But if you're able to make certain moves to open that up, it will make things a lot easier for you to weather this storm. Ultimately, you want to do as much as you can, make good financial progress, and use the resources that are available to make things go further for you. I want you to win, but also I don't want you to be in a dampened scenario. So I would encourage you, as you're looking forward, join the Money Talks group, join this channel, join other channels, things that can help you win financially to get around those, because it is going to be a lot of chaos. And above all, before you step into a financial decision, remain calm. Get yourself to a very peaceful state so that you can objectively make good, solid decisions. If you need help, I'll be here. But join me in the Money Talks group, and I'll see you later.